Okay, so this is a defining moment for the S&P as it is trading around critical support levels. Yes, the index is quite bearish and it lost momentum in the past month. However, it is still above key support levels, and only if it loses them, we might see a real bearish reaction that could take us to much lower levels. In this video, you'll learn the key points to watch on the index from here. My name is Nathan and you are welcome to the Finance Hydra channel. First, let's start our analysis looking at the 1-hour chart, because in the 1-hour chart, we can see more easily this support level over here at 39.49, which in my humble opinion is the most important support level on the index. If we lose 39.49, then I believe we're gonna crash to lower levels, which we're gonna talk about later. But keep in mind why the 39.49 is so important. This black line did work as a support level on January 25, on February 24, and again on March 1st over here. So yes, it seems it is a triple support level. If we lose this triple support level, then probably the index will seek its next support levels in the short and in the midterm as well. Meaning, in the daily chart, the next technical target would be 38.85. What's more, the index is already bearish in the daily chart because it is doing lower highs, lower lows, trading under the 21 exponential moving average. Any bounce to the 21 EMA or to a previous resistance level might indicate a possible sell sign on the index because the trend is bearish. Right now, there's nothing indicating that the index is gonna bounce, but we are trading near a crystal clear support level, which is quite problematic because if we look at the Nasdaq index, we see a similar situation. This red line at 11.9K is indeed another support level over here, which did work as a support level 3 times in the past. The Dow Jones index is also trading around a key support level in the daily chart, so it feels like we are in a support level. What's the problem? The problem is that we don't see any meaningful bullish reaction. In addition, we see yields going up like crazy. We don't see any top sign on the 10-year yields, and the fear index VIX is doing a pullback to a previous support level, the 21 EMA, and we are doing a bullish reaction around the 21 EMA. So if you ask my opinion, it feels like we did a pullback. We are doing a bullish reaction over here. If the fear index VIX breaks today's high tomorrow or in the next couple of days, maybe it is going to bounce to higher levels, retesting maybe the 23 area over here. So this is a quite problematic situation for the index. If we see a bullish reaction over here, maybe it is going to frustrate this bearish thesis and maybe we're going to bounce to higher levels, maybe to the 21 EMA next. But in the lack of bullish reactions, there's nothing else to do. The S&P is just bearish. Of course, there is still hope for a reaction, and I agree. If it reacts right now, the timing couldn't be better because we are not only above clear support levels on the S&P, on the Nasdaq, on the Dow Jones, but if we take a look at some indicators, we just triggered a golden cross pattern. The 50-period moving average did an upwards breakout from the 200-period moving average over here, this red line. So we just triggered a golden cross pattern. Right now, it feels like the S&P found a support level at the 200 moving average over here. So this is quite interesting. This is quite technical. I do agree that if we see bullish reaction over here, might be an incredible opportunity to buy because the risk reward ratio will be very attractive. However, right now we don't see any meaningful bullish reaction. In fact, if we lose again the 50-period moving average, I do believe we are going to just resume the bearish sentiment and seek much lower levels. And of course, for premium analysis, insights, and valuable trading ideas, check our website, link in the description of this video. So far, we are doing very well. Now back to the S&P. In the weekly chart, the problem is that we did a false breakout from this bullish pivot point. We broke 4100 over here and we did a false breakout. We lost the 4100 and right now we are seeking the next support level. It is quite good to see that the next support level in the weekly chart is this purple trend line over here. So see, this is why the situation is quite problematic. This is why it is a defining moment for the S&P, because we see a support level over here, 39.49, seen in the 1 hour chart, seen in the daily chart as well. We see a multiple support area on the Nasdaq index, on the Dow Jones index as well, and in the weekly chart we are just above this purple trend line after doing a golden cross pattern. So we see a very strong support level in this area over here. So only if the S&P loses the 3900s, I believe we are going to completely frustrate this bullish thesis and reject all of these indicators, resuming the bearish sentiment, the bear market over here. So let's pay attention to the area that the S&P is right now. Let's wait for a crystal clear breakout or for a bullish reaction. If we see bullish reaction, I do believe we are going to retest the 21 EMA next above the 4K again. However, let's see, right? The trend is still bearish. I'm gonna keep you guys updated on this channel. So if you're still watching this video and you are not my subscriber, come on, subscribe this channel, join our community. Thank you very much for your audience, my dear friends. Stay safe. Farewell.